Hey everyone, welcome to On the Flip Side. This is a show where we get to talk about any topics related to mindset and or real estate. Today we have Caro on from Modelo Properties, and I am your host, Diana Lizarazo. Thanks so much for coming on.
Thanks so much for having me, Diana. It's always a pleasure.
Yeah, we always have fun conversations, and today's topic I think is going to be a lot of fun and exciting to talk about just because there's been so many changes, right?
Oh man. Yeah, talk about changes.
Yeah, so we will be talking about the changes we've been seeing in the market. And just before we get started, do you want to just tell people a little bit about yourself?
Yeah, so I'm Caro, as you said, from Medallic Properties. We started officially investing with a strategy, I would say, about a year and a half, 2 years ago. And since then, we've acquired 30 different rental units, and we're continuing to be active in the market, just in different ways, pivoting with Airbnb and coaching and all the different kinds of things that we're passionate about. So we'll talk more about that, I guess, throughout today's chat.
Yeah, awesome. And for myself, I'm a private lender and I specifically lend to flips and burrs. That being said, if I do find an amazing flipper burr, I'm definitely on those too. So I do the active side of the flipping and burring since my husband is a contractor. So I definitely take advantage of his skills.
Yeah, I don't blame you. I don't blame you.
Yeah. So let's get started. So what have you been seeing in this year, the last few months? What have you been seeing has been going on in the market?
Yeah, so I guess a little bit of background as to when we first really started seeing the changes. Originally, we started really with the burr method. That's been very successful for us, and it's really how we've been able to generate our portfolio so far. And we got into a flip back in November 2021 now. Sorry, the last 2 years are kind of a blur.
I know, right?
And we were getting ready to list it. And actually, I think you and I were talking right around that same time. And there was a property there, like literally within 5 minutes that sold. It was like not even as nicely updated and stuff. It sold for 1.51. And I was like, oh man, okay. This is like 2 weeks difference. So let's list it. I think we can get somewhere realistic. Like worst case, we'll get like 1.4. And then we listed it, and the highest number we got was somewhere close to 1.3. And I was like, that's a big drop, right? Like all within the span of 2 weeks. And I was like, you know what, maybe it's, it just wasn't the right time. But we did have a lot of people come through to look at it. We literally listed it just like a week or so before the interest rate hike. And then the interest rate hike happened somewhere in the middle, and there was just like basically silence. So we had the option of what a lot of people were doing, which was pulling it off the market and then pulling it on the market again at the right price that you wanted. Because there was like that period where you were going from seeing a lot of multiple offers to not so much multiple offers. And then so people would just readjust and relist. But then, so that was a really quick shift. And then from there, it changed very quickly to no, if you don't list it right from the get-go, you're just not going to sell it, right? So we listed it for the right price. Like our real estate agent was amazing there. And actually it was her that told us, like, listen, this is the amount of people that you've had through the property. Based on the new interest rate hikes, like I really do think that this is just how much of a hit this had on the price point. So I'm like, okay, big hit. At the end of the day, we were still very profitable on it. So because we're super conservative with all of our numbers always. So we just walked away from it and we're happy. But that was, I
And
guess,
that
the
is
first.
a point that I actually wanted to, sorry to interrupt, but I wanted
Yeah.
to actually reiterate because I think it is a very good point. And like you said, I just actually noticed that we seem to always have like major conversations when we see things like changes, big changes happening. Because you said that, I'm like,
Yeah.
oh yeah, and then this happened. I'm like, I need to go talk to her and see what's going
Yeah.
on. It's like I go on like missions. I'm like, when I see things happening, it's like I need to talk to everyone. What's going on? What are people seeing? Because it's like I'm seeing things, and and it was the same with us, right? We were both like, are you seeing the same things I'm seeing? Like, and we're just kind of,
Yeah.
like chatting. So that's funny you said that. But I just
Yeah.
wanted to reiterate that, because I remember you were saying that even on I think when you guys bought it, I believe you were expecting like your numbers was to sell at like 1.2 or something like that,
Yeah.
right?
Yeah.
Was that the right? Yeah. And then And then so it's really funny how we do get into the hype and the FOMO, because you're seeing 1.5 million, like, oh my God, like the profits are just going to be insane, amazing. And then so you feel like you're losing when it's just like you're still winning, but it's just kind of like you get into the hype, right? Because you're just like, oh, that extra, obviously that extra profit would have been amazing. But at the same time, like that, like I think you made like the great decision to be like, you know what, let's get it go. Like, don't get into the FOMO of like having to wait for those numbers, because maybe they won't come back, because maybe that was just like, which it was, right? We did see like it just like skyrocketed 100K or more, and then dropped like 1 month
Yeah.
to the next. It just like did a whoop and down again, right?
And that's why
So
you don't time the market.
Credit.
I said, and that's why we don't time the market, right? Because it's just so unpredictable. Like what happened was just insane, right? So, and I remember even before this happened, you and I met in, I believe it was somewhere like in February or March. And I looked at you and I was like, Diana, are your numbers making sense? Because I can't find anything that made sense. And you're like,
Yeah.
no, girl, like nothing makes sense right now.
Yeah.
Because
I
really,
got so frustrated, actually. I was like literally getting angry. I was almost getting to the point of frustration that I was going to change my criteria to change things. And then that's when I said that to myself, that's when I stopped and I was like, you know what? I need to take a break. And I'm just getting irritated that I can't find anything. And I personally just had to stop with the like looking, because it was, to be honest, super frustrating to see these numbers going up like crazy. And I couldn't justify anything because nothing was making sense, like not a flip or a burn. I'm just like,
yeah, exactly. Not rentals. I'm like, how are people affording this? I'm like, when I started running numbers, like we're really aggressive with the amount of deal analysis that we do on a weekly basis, on the amount of offers that we're putting in. And when we saw the gap between where we thought the max was and what people were putting in offers, I'm like, okay, somebody in this market's going to get stuck with a hot potato. So we didn't pull back, but like we didn't get more aggressive in our offers. It was like, this is our numbers and that's what we're going to go with. And if we don't find anything, then so be it, that we won't find anything. And we weren't able to buy anything really in that 3-month period, just because it was insane, right? So yeah, so I guess that was the first indication. And I guess now it's just a really—
Sorry, I'm gonna stop you again. Sorry, because I wanted to say, since we're doing that, I might as well say on mine too. On the private lending side, everything actually, so for on the private lending side, it was really interesting. All my money came back. Like I've never been so liquid in my life. Like it was so funny because all my private lends were all over the place. Some were overdue, some were underdue, some were, I think I did have one that was on time to be like ending and I should be getting the money back, but mine were all over the place. And literally when that high went up, refinances happen. People, I think, like got their ducks in a row and we're just like, either we're selling or we're refinancing, because everything came back. And it was really funny because everything came back and there were no, and I'm telling people like, hey, send me your deals, I need to put this money to work. And it was literally, I think probably in like April, when people started again, now April or May, where people started to send me their deals and I started like, pumping out some private lends. But like, even so, I just kind of wanted to say that side too, that, like that, like a lot of like, especially the investors that are more experienced and understand, like they saw things happen and they're like, let's make moves, let's go, this is the time. And like that, all my money came back. Like I was very shocked to see that.
Yeah, I mean, that's a good problem to have, Diane. I know a lot of people weren't necessarily so lucky, right? Because some people were maybe a little bit more aggressive, and they weren't able to have the same results, right? So I think count your blessings there, that's for sure.
100%. Yeah, because you're right. I did hear some stories of some investors not even being able to close on properties, which I think we're actually seeing right now again happen, but in a different sense. I think this is actually a worse one. Which do you want to lead into this next episode of craziness?
Yeah,
this is really
sure.
crazy, to
so,
be honest.
I guess, yeah, so we went from, things were like, you could still find deals in the market, it was tough to, but you could find things to make sense of, I guess, a deal, right? You have to be a little bit creative, right? Like we were doing a lot of duplexes, we moved to like triplexes a lot more to really make the numbers make sense. And then in January, there was like, you had to really quickly identify, what, this market doesn't make sense. Then we got into, like, we were in the middle of a flip and we saw like within a two week period, just things like really take a dive. And then since then, I guess banks and everything have been adjusting. So as I mentioned, we specialize in the BRRRR method. So one of the most, for example, recent things that we found out is that banks, for example, they're taking longer to do refis. And the appraisals that they're accepting are actually within a shorter time period. So if anybody's been doing BRRRRs over the last year or so, you were able to do a BRRRR and have comparables for up to 90 days. Now banks have told appraisers to basically pull back and just be a lot more conservative. So they're doing things like, for example, on my last BRRRR, they said, okay, well, even though this is a comparable that you found within 30 days, overall, the market has calmed down 20% in this overall region. They didn't even specify, like, whether it was for a semi or condo or whatever. It's like, overall, this is how much the market's come down in this region. And so even though you have this number that is like one of the highest, it's very comparable, and it's like right in the vicinity within 30 days, we're going to have to take a 20% depreciation on that. So even if you could justify the value that you were buying something or refinancing something at, the bank would come in and say, okay, you know what, we're only going to do it up to 20% of that value. So, you were looking to refi something, you were hoping to get at least, 950 or 900,000. And then the bank would say, okay, no, but even though you have a comparable, it's 20% less than that because of the regional depreciation, or I guess devaluation that has happened. So all of a sudden your after renovation value or your purchase value was 750, and then people are just left scrambling for that gap, right? Again, different situation from a buy than from a refi, because in the refi, I mean, more money stays in the deal, and that's not the end of the world. Again, we prepare for that, and now more than ever, that's what I would suggest people to do. You have to prepare for those scenarios. This is not the kind of market where you get into one deal and you try to run a perfect scenario of how much money you're going to get back, and then use that money for the next deal, and the next deal, the next deal, because there's so many rules that are changing by the second that, maybe refis won't be allowed. I think there were some rumors that in 2023, if you want to refinance your home, you can only do it up to 60% of the loan to value as opposed to 80. That's a big deal, right? So again,
that definitely makes us change our numbers a lot, right? Like our calculations will change.
Right. And who knows if this is going to go through or not. But again, you need to be flexible enough that if something like that rolls out, you're not left out in the trenches, having to make up for the difference, right? So I think to your point, Diana, on purchases, a lot of people, we're hoping to get a certain valuation, they're not seeing it, and then they have to put up an extra, 50, 60, 80K, just to be able to close. And I mean, who has that kind of money just sitting around for these kinds of things, right?
Mm-hmm. Yeah, 100%. And so, and it's actually I don't, so that's good to know, because I didn't know about that, what the rumors are. But I was just thinking about the conversation we had and others I've had with other people. And to be honest, I even went to all my borrowers and I was like, guys, because I was also nervous, right? Because I was like, guys, be prepared to not get what you're expecting on your refis. And so I actually let everyone know, all mine. I messaged them as soon as we spoke, to be honest. I think the next day I just send messages to everyone. I'm like, guys, be prepared for your refinances to may not go the way you expect. And I was trying to not alerting. I'm just just go talk to your mortgage broker, which all you guys that are listening, the same thing. Think it's a good time to just know what's going on, because things are changing. It's really important to just talk to everyone and just so you know where you stand, because it may make you make different decisions, right? And you rather do it now than maybe you only have 1 month left, and then you're scrambling to get things done, and then you're waiting for the appraisal and everything, just it's just don't do it in a rush, and just kind of be aware of what the changes are.
Absolutely. And you know what, Diana, so I will share, we were able to combat that appraisal. And the way we got around it for anybody that is in that situation is we came up with basically a report that said, okay, yeah, this is how much the depreciation was in the region. That region is huge. You can't compare Fort Erie to Thorold or St. Catharines, or they're so different. And even within those cities, you have good and bad areas, right? And so we were able to show kind of that our property didn't follow or didn't meet that criteria necessarily. We were also just basically justify why our property did not meet that, and we were able to get the value up, which helped. So you need to be involved in that process and just like know what kind of arguments you can make. So if you know that the prices have come down a lot in your region, maybe start to do the research as to why your property does not follow through with, I guess, what the market's seeing in your region. For example, you know, if majority of the market came down, and that was primarily because of condos, and you have a semi-detached, well, that's a point, right? So make sure that you find supported evidence that shows that you shouldn't be grouped into that bucket, right? And I think that helps, you know, appraisers really justify that. So that was, I guess, a way around it. It's not perfect. We still didn't get, you know, the value that we were hoping for. Again, at the end of the day,
to increase it at least, which
yeah,
was
we were able to increase it. And at the end of the day, Diana, it really just comes down to, like, it is more cash flow, because the less money you take out on long-term rentals, it's like, okay, well, I took out less money, but now I'm just basically getting more cash flow, so it's fine. And you know, in the long-term scheme of things, it's going to be fine. But again, it's just not a time to be aggressive and be, you know, over leveraging and trying to, especially if you're doing private lending, right? And I guess that applies on both ends, and you know that is like, you need to be careful if you are lending out your money. So one thing that you and I were talking about is, I personally prefer to just stick to first position mortgages. Whoever, if somebody doesn't know what that is, really, it's just, you have first claim on title if somebody defaults on their mortgage. Because if you are second to title, the value may not be there to support you getting your money back, if it's in the short term, right? So that's one way that we're pivoting. Diana, like, what else are you seeing on the private lending front that you're doing?
Yeah, so like that, like exactly that. And I noticed, for example, that private lenders are very, very scared. And I think it's because a lot of private lenders also, for example, have like HELOCs or lines of credits, where, you know, the interest rates are higher. And so with these changes, it does scare you, because you're like, okay, if another interest rate hike, like, what is that going to go? And like that starts reducing the profit margin for you. So, and I think like a lot of them were probably taking advantage to do seconds to do higher interest rates. And so I think a lot of those people, like, I would even suggest for both sides, lenders and borrowers, don't consider seconds. Like, make sure you have the cash to close with the down payment, closing costs, and renovation budget. Just do a first, and that's it. Like, I wouldn't go beyond that right now, because just how the market is, and it's fluctuating so much, that I just think you may put yourself in a situation that you wouldn't want to be in.
Yeah. And I know you and I were talking about, you know, a lot of people are afraid to buy real estate right now. So they get into situations where, like, well, why would I take a risk on real estate if I can do like a promissory note and get 17%? Listen, if anybody's out there, and I don't want to generalize, but my gut feeling, and again, I'm extremely conservative, I'm very risk adverse by nature, but if anybody is coming to me and saying that they have an opportunity to pay me 17% interest, that should ring alarm bells for you, because this kind of market does not really support those kind of values, right? Unless it's like, you know, an amazing, amazing deal that somebody literally got on pennies on the dollar. No deal can really withstand that kind of interest rate right now, because of the way the market is. So unless it's something like super short term and you see that it's an amazing deal and it's a super, super well-known investor, but even then, just be really careful. Like, if it sounds too good to be true, it probably is. Yeah.
Sad to say. And these are not the times, actually, because the last 2 years was kind of crazy in the sense that people were throwing the money at things and not really thinking about it, you know, because things were just going so amazing. This is the time for, again, both sides, the investors, the active investors, and the passive investors, to be actually properly doing the due diligence. Like, if you're a passive investor, you're asking for all the details to the project and making sure that it is what it is, you know, like it is what they're saying it is, and there is contingencies, and they've taken into consideration, for example, like that, like what if the interest rate goes up again? What is the, like, understanding the terms and how, for example, like the renovations can give, like, what are their like mitigations to renovations, and if it goes longer, or like, I don't know, supplies aren't there, whatever. Right now is the time for both sides to make sure that they're doing the right analysis and making sure that they're covering their bases, because it can get very dangerous now, if you aren't as if you're not paying attention, because I do know a lot of people would just be like, take my money, kind of a thing. I don't really care what you're doing. I don't know what it is that you do, just take it. This is not the time to do that on either side. Even like that, like, don't be like, you know what, I want this house and I want to do a project, and you're half winging it, because there are people out there that will wing it. These are not the people you want to invest to, and you as yourself, you don't want to do that, because you're going to put yourself in a really bad situation.
100%, 100%. I couldn't agree more. Yeah, I mean, and I think a lot of investors specifically are going through this kind of emotional roller coaster, because we just went through a phase where everyone was buying like crazy and doing all these crazy things and seeing all these kind of returns. Now some people are kind of like on two sides of the spectrum, but some people just are having a hard time adjusting, right? So one of the things that I kind of have to tell myself is like, okay, there's a difference between doing something out of fear. Like if I'm genuinely, like, I'm just generalizing, but like, let's say you had $1 million on the sidelines and you were terrified of investing in like one more property. Well, you may actually just be allowing headlines and stuff to flood your brain, because there is a really great opportunity to go out there and find good opportunities and make it work. Because anybody selling right now, really, for the most part, is motivated. Because anybody else that isn't motivated is just listing their properties out for rentals, because they're not willing to just take the huge loss from listing it right now, right? So I had to ask myself, like, okay, am I just scaling back and running things very conservatively straight out of fear, or am I doing this like as a smart decision? And I think being able to distinguish between the two is so important. You shouldn't make decisions just based out of fear, but if you're not emotionally there to invest because you're either exhausted or you're just really so afraid that, like, if you invest in anything right now, you're going to lose sleep at night, or you don't have the resources, just make sure that you're taking a break. But if all there is just like an emotional component, but you have the resources and you have the time, you should be going out there and trying to find and maximize the opportunities, because there are a lot out there.
And I think some are coming, to be honest. I think we're getting some really good opportunities coming. But yeah, and just like that, like, don't let the fear control. Look at the data and go through the data is definitely important, because like that, I feel like we're going to be coming to some really great opportunities. So definitely having eyes and ears open. But right now is like, cash is king is important. Like, that's like cash is king right now. Like, you got cash, go looking. You got no cash, go study, go learn, go strategize, go plan, get prepared, but do not, this is not the time to like be investing if you're going to be doing everything again, unless if you get like that diamond in the rough, amazing deal, then maybe it is worth it to put it on the HELOCs, the lines of credits, whatever. But just tread very lightly, I say, to those situations, because right now cash is king for sure.
100%, right? So and it's important to have healthy reserves, right? Like, you don't want to be put in a position where mortgage payments have gone up insanely, like insanely.
Like you were telling me, like more than half your profits have disappeared, I believe, right? Like, or around half your profits.
So half the cash flow, right?
Sorry, that's what sorry. Yeah.
No, it's all good.
No, there's a difference, and it's good to identify, because it's important like that. In your case, you're fine because you still got cash flow. But for those that were on the line, and let's say you're variable or you're coming up for renewal, like I am, mine's coming up for renewal, and I'm just like, oh, I'm like, why me? But it's these like people on variable, like, yeah, you're seeing these changes month by month, unless if you have a certain kind of mortgage. But if you have the one where it shows month by month, you're getting impacted. And I'm sure you don't even need us to tell you, you're seeing it, right?
Yeah.
But it's very, important to have those reserves for that. Like, yeah, this is not the time to think of things lightly. Like, just make sure you're covering your bases with what you have right now, and make sure you can, I don't know, how much would you say, like 6 months of reserves or something? I feel like maybe
I
even
think
more,
so.
because things are just like going crazy. Maybe six to
I
eight
think
months
so.
of reserves.
Yeah. I'll be honest, I have a little more than 6 months of reserve.
Yeah, but we're like
Um,
overly cautious people, we're always like, we have
yeah,
like reserves for our reserves for our other reserves.
100%, right? I don't necessarily think that people need to do that. But at the end of the day, because I do think that if somebody, like, if an investor that has a lot of reserves is coming up short to make these payments, so is everybody else. And I feel like at that point, you start getting into a situation where banks might start seeing a lot of defaults on mortgages, which nobody wants to see, because that affects everybody negatively, including the banks, including the government. So I think that there would be some sort of intervention before that were to happen. So I don't think you need to prepare for like doomsday, but just make sure that you're liquid enough so that you can sleep at night, right? There have been a lot of countries that have intervened with the affordability of housing, because again, they want to prevent banks having to default, like having a bunch of defaults on mortgages, right? So things like longer amortization periods. I believe somewhere in Europe, they're doing the option of not paying for your mortgage for 8 months while interest rates settle, which I don't know exactly what would happen here, and if anything will happen, because a lot of people are, like you said, in those fixed payment plans. So if interest rates settle by the time a lot of these mortgages come up for renewal, then we won't really see that impact. I do think that there's going to be a little bit more of an impact in the market overall, because I don't think that a lot of people have been impacted by the rates yet.
Mhm.
And they're either going to raise them more because they're not going to see the results that they're hoping for in terms of inflation, or people are actually going to start to see a really big hike in payments. I think the last interest rate hike was the first time that a lot of people's trigger rates were hit. So just now they're starting to see increases of like $300, $400 a month in their mortgage payments. And so I think we're just starting to see the effects of that. So there's a little bit of a lag there.
But I also think, actually, now that you're bringing it up, because I did want to talk about that too, is that I think because the governments weren't seeing the expected changes they wanted with the interest rate hikes, I think that's what we're seeing right now. Because the interest rate hike isn't the impact. And to be honest, I actually was not expecting any, like, that interest rate hike not to impact anything. But I guess the government's also expected that too, because what are they doing? They're limiting the banks from lending out, right? That's what's basically happening, is the government is, giving them restrictions, probably minimizing the amount of mortgages they can give out, or the amount of money. And so they're having to, either that, or they're making them like that drop like a certain percentage. So this was like, I feel like these two things is really what caused what's happening right now. I think they probably noticed, because I also was just like, the interest rate's not going to do anything. We're already used to it. And it's not really that high. It's not like a crazy number where it should scare anyone, especially that they've been slowly increasing it. So it kind of helps us, better prepare for it. But I think what really impacted was those rules that they're doing to the banks, to not allow them to do, like, to expect like that, like, oh, it went down 20% this year so far, so it's going to go down another 20%. Like I was just like, does that really sound that realistic? Like, I was just like, wow.
No. Yeah, and I believe like every time the interest rates go up, also the government has to pay a lot more on their debt. Um, they're going to want to cap that at a certain point. Like, I think it's a ridiculous number how much their payments go up by as well, right? Which, they don't want to bankrupt the country. I mean, I don't think so.
Yeah.
At the end of the day, you can control what you can control, right? So just be safe out there. I think people need to, like we said, just have additional cash reserves. Make sure you're not over leveraging yourself in terms of like, relying on one project to move to the next one and the next one, because there's going to be a lot of caveats, like not even just from a borrowing perspective, like really, truly inflation has been insane to construction prices. Like I remember the first conversion that we did, we paid like 70 grand. Like it was insane. Now I feel like you're lucky if you can do a conversion for like less than 150. Like it's rare. It's very rare, right? So
Yeah. Well, things have definitely, because it's not only materials went up, labor went up, right? Because like that, okay, gas is getting expensive. Like people have to pay their bills, especially with serve. Oh, I got used to this amount of money. I should be being paid that or more to do labor work. So yeah, that has been just like it's like hit from so many sides.
Exactly. Yeah. I don't want to sound like a Debbie Downer, because I really truly do believe that real estate is the way to go right now. I think just people need to be more educated. I think anybody and their best friend.
Like, sorry, finish your sentence. Sorry.
No, I was just going to say, like, everybody and their best friend could have invested in something in 2019, 2020, or really any time, and made a killing over the past 2 years.
100%.
Now's not the time to do that. Like, you need to be educated. So like, if you are looking at this and saying, oh, I can't invest. No, it's not that you can't invest. There's ways to grow. You just need to do it smartly. So invest in your education, make sure that what you're getting into makes sense, that you're running different sensitivity analysis around interest rates. Because the other side of the coin is also like, if you're running your numbers right now and you have like, actual money that you want to invest in addition to your reserve funds, and you're running your numbers at, call it 10% interest rate, you're never going to buy anything in this market, and you're just going to miss opportunities as well. So I think the way that we do it is we run our numbers based on what interest rates are right now, and then we try to figure out, okay, what is that next level that would break this deal? So for example, if an interest rate hike of 0.25 makes this deal not profitable at all, well, that's too risky of a deal. Then I'm either going to lower the price or I'm just going to walk away from it, right? But if it takes a deal going from 6% interest rate to 12% or 20% interest rate for it to break, okay, well, maybe you have something in your hands, right? So I think having certain criteria that you're comfortable with, and I guess there's two fronts to that. One is on the interest rate, like sensitivity that you run, but also like what kind of return are you hoping for? So if typically, for example, for us, we don't invest in anything that has a lower return on investment than 15%. Reason being, you might as well just loan out your money at that point and not have the headache of everything related to real estate, right? So now for us, like we've kind of taken that threshold a little bit higher just to give that cushion to whatever's happening in the market, right? So if the number dips, we're never really below that 15%. So everyone's got to figure out their own thing. So again, I don't want to sound like a Debbie Downer here. For me, it really just comes down to have an extra cushion that you wouldn't have had before. Don't run things back to back. Like give yourself a little bit of a breathing room in case things don't go as planned, which is very likely that they won't. And then on top of that, like run conservative numbers, like but not too conservative to the point where you're not, tackling any deals.
And so that being said, I do want to talk about the good things about what's going on, because there are good things that are going on. We just want to make sure that you guys are aware of what is happening. This is not like alarm bells that's trying to scare you. It's just making you aware of what's going on. So do you have any like good things that you would like to highlight that's happening now, or that we're going to be seeing now?
Yeah, well, I mean, I think no matter what, buying at lower prices is always better because interest rates will absolutely come down. So when that happens, you're going to be glad that you bought something at 100K, 200K discount.
And that's a really good point that you say that, because I actually had a guy who messaged me and he's like, I can't buy right now because of the interest rate. And I found that a very funny comment, because to me that made no sense. Because when interest rates goes up, the prices of houses go down naturally, normally is how it happens, right? And so that means if you get it for, if your house is cash flowing at like say 5% interest rate on the mortgage and it's cash flowing, when we go down to maybe back to the 3 or 4s and you go to renew, you're even more cash flowing now. So for example, like interest rate, I didn't even understand, like you should be running your numbers with today's interest rates or even like that, maybe a little higher, just to see just to see where you stand and making sure, like you said, where your break even point is. But you should actually be happy right now that interest rates are higher and you're going to buy right now, because like that, if you're cash flowing right now with higher interest rates, you're going to be doing even better in the future. So do not stop interest rates from, like, do not make that be your stopping, because that just didn't make sense to me. You should actually be happy because of that, right? Because like that, like take another whatever, like do whatever you feel comfortable with, like your interest rate to be, because they will go down and you're going to be cash flowing more. So if you're cash flowing now, it's going to cash flow then. Sorry to interrupt, but I just wanted to say that because that like popped
No,
into
no, not at all. It's a conversation, right? So I get so passionate, I just keep talking sometimes. But yeah, and I guess to that point, also the fact that interest rates are higher, that doesn't necessarily mean, like, even if you're cash flow negative, like you can still be making profit on your deals, right? And I think a lot of people don't realize that there's a difference between cash flow and profits. Even if you're cash flow negative, as long as what you're getting in rent is higher than what you're paying in interest and utilities or carrying costs of the property, the net of that is actually like gains, right? Somebody's paying down this debt for you. Cash flow does not really mean anything, right? You just need to make sure that you can sustain it if it is negative. But otherwise, like, really at the end of the day, again, real estate in the long term is really where things are at, right? So I guess from that perspective, but also like if you are doing like if you are having higher interest rate, the higher interest rate cost that you're seeing is actually not truly a direct hit to your profit, because guess what, that interest rate is tax deductible. So if you are, doing rentals through a corporation, typically long-term rentals are charged at 50%. So guess what? Now, if your interest rate or interest payments went up by like $100, well, you have $100 deduction. So really your effect is only $50 of in your like bottom line. So I think a lot of people don't realize that because they're just seeing the day-to-day and they're just like so terrified of what's happening on a month-to-month basis, I guess.
And like that, I mean, especially when it comes to the BRRRRs or the long-term rentals, I mean, as long as you can keep it for as long as you can, you won't be losing money. And some other things that I wanted to bring up right now of great things that are good for people that want to buy or soon is because of these two factors of interest rate going up and the government not like putting restrictions on the banks. They're actually forcing the prices of the houses to go down, and another thing which I found very interesting, just because I'm having two rental units coming up that I have to get new tenants in. The rent has skyrocketed. I'm in shock. I am so in shock that because the people that are leaving, they will have to go into they were looking at going into a 2-bedroom. We have this specific one is a 3-bedroom, and they're going into a 2-bedroom, and it's like $100 more than what they were paying with mine. And when I was looking at mine's going up like, I don't know, $600 or $700 or something more. I was in shock. And then the other one, something like it's a bachelor, or I mean, we may convert it to a 1-bedroom. We're still on the fence on that, but same thing, like the numbers that we were thinking we were going to get are probably like at least probably another, like we're going to probably, from what we thought, probably another $200-300 or something. But it's insane. I am in shock. So
yeah.
So that's another amazing
that rents are going to go up 40% over the next 3 years, right? That is, of course, if the government doesn't do an intervention, which let's hope they don't.
Well, they shouldn't, because it is impacting landlords, right? Like our utilities have gone up. It's just like the mortgages are going up. Like this jump is happening because of all these changes that are happening to us, and we need to carry it over, right? And it's like, like sadly, it's like we're not here to do charity. Like we're here to run a business and make sure we stay afloat, and it's like everything gets brought down, right? So it's like, yeah, like to be honest, I feel like I hope, and I think they are next year's numbers for, I mean, it's not anywhere close to the inflation numbers. It's a little bit better. But I mean, for example, like for people that are doing turnovers like that, like we're gonna have 2 units coming up. And like I'm just like, that house is gonna like cash flow like crazy for us now. And I'm just like, so if you guys are getting some turnovers, check out your area, because I think a lot of areas are going up, and I think it's like literally in the last month or two that it went up, because I'm pretty sure I checked like a couple months ago and it wasn't like this like spike up on rent. So I think that's something to kind of be excited about. Same thing, like if you have the cash, like opportunities are going to start coming because the governments are forcing the prices to go down. So I think because of this, I feel like we may start seeing, at least somewhere next year, we're going to probably see cash flowing properties again happen, just because of what the government is doing to force those prices. They're like literally like pushing those prices down, right? Because imagine like what happened to you on a refi. The same thing is probably going to be happening to the buyers, right? Someone's like, look at this scenario, right? So I'm going to be like, hey, I'm going to sell my house for 900, right? And I'm like, woohoo, I want to, and then the other person's like, woohoo, I want to buy for 900. I think that's a fair price. Like you said, like that one sold for 950, 900 is amazing. I'm going to go for that, right? And then the appraisal comes in, it's actually worth 750. So what am I going to do as a buyer? Hey, my appraisal came in at 750. Your house is worth 750 because my bank is only going to do 80% of 750. That's a forced drop, which is going to be helping. It's in that sense, like buying is going to be good because I mean, again, making sure you're running the numbers, but I think with these margins are going to help, right? Because we're seeing rents going up a lot. We don't have enough houses on the market, so I mean, they have to also go up. And the governments are forcing the price of houses to go down. So I kind of feel that we're going to be seeing, again, only my opinion, but I think we're going to be seeing cash flowing properties coming up.
And I mean, at the end of the day, like I hate to say, we're not in the business of doing charity, because at the end of the day, I really do believe that we are taking a huge risk investing all this money. Like it's a significant amount of money that anybody has to invest to do conversions and actually create these beautiful renovated units for people to move into. So we're taking on this risk, we're taking on this cost, we're taking the heat of all these additional interest rate hikes. To me, it's just a matter of even sustaining that. Like I cannot physically sustain providing housing for other people that simply can't afford to buy a house if the government is implementing all these different things. Like to your point, I'm not going to pay money out of my pocket every month and do all this extra work, which if anybody knows, managing tenants, like it is a full-time job pretty much, which is why we've had to hire assistants. And have to incur all these additional costs to lose money. Like nobody's doing that, right? So at a very minimum, we need to break even. And if you've been following like how much you can raise rents by in Ontario, it's like over the last few years, despite inflation being like skyrocketing, it's like nothing, right? We have to pay double like utilities, like double the renovation costs. So unless people want to move into really shitty units, or they don't have any places to move into because nobody wants to buy and provide housing because of all the restrictions that's being put upon us. I mean, it doesn't serve the population well either, right? So it's not even about profitability at that point. It's just like things need to make sense. Otherwise, like I remember when like locally they were looking to charge companies more money because they were like, just like, we're going to tax, companies that make too much money or whatever. That was like the government's implementation. And then all of a sudden, all these companies were like, okay, F this, I'm going to pick up and go to Mexico instead of providing jobs and housing and stuff to you. Because I'm not just about to fund everybody's lifestyle and do all this work in your country and provide all these opportunities in your country if you're just gonna like charge me on the back end for all this extra things? Like that doesn't make economic sense. So at the end of the day, that's what it is here too. Like I've talked to a lot of different investors that say if they were to implement this, they're either gonna not provide housing, or the housing that they're going to provide, it's going to be really run down and shitty. Because like, what is the benefit of doing renovations and providing beautiful housing if you can't even get compensated for it, right? So at the end of the day, it is the end users that lose, and a lot of people don't realize that.
Yeah, I was just gonna say that it's very true. Like the government does these implementations saying that they're going to, for example, tax the businesses or put whatever, like charge whatever more to the businesses or let's say landlords, whoever, right? But what's gonna happen? Like, or even the thing that they're thinking to do, like this flip tax. I found it really funny because I was just like, so you're basically going to, because we as flippers need to make money, right? Like we're not here to go lose in a flip. Like we have to make our margins. We have things we need to pay for, right? And I was just like, fine, if you decide to, for example, let it stay for a year and like we have to hold it for a year, what is going to happen? I'm going to now be saying like my expenses are a year plus closing and whatever extra amount of time that I need. And who is it going to hit? The sellers, or it's going to hit the buyers. It's not going to hit me because I need to survive, you know? And it's like they're impacting the people that they're trying to help, and they're not realizing that everything flows. You know, if I have more expenses, I'm bringing that down to the next person. You know, like if I have more expenses to take care of, like one of our units, we started reducing some of our expenses to it because I'm just like, same thing. I was like foreseeing things happen. And I was just like, I don't want to get into a situation where my expenses are going to be too much. So we did some changes to some of the expenses we had on the house so that we wouldn't have, so we just had some extra cash flow to just make sure that like we'd be okay. I mean, like, it's still cash flowing for a while, but again, you know, like both are how we're way over risk, like who can't deal with this. So, but we're just like, and that's the thing that I want to also just emphasize is just be creative, right? Like there are things you can do to fix your situations or make it better, to make sure that, you know, like that, like one of the things I would just say is, for example, I know there's one investor where they do the refi and they keep 20 grand. And that 20 grand, I mean, I don't know if this really works very well now because I don't know how the refi like money, but they would like the property, they were okay with the property now cash flowing for like 2 years or something. And they would, and then that 20 grand that they would do on the refi would go and just sit in the bank account. And so any extra expenses would just go off it. And they knew they were covered for like a 2 or 3 year period. And then by then they would be okay to do the next refi or like the renewals, and then things would balance out. So there's so many different ways to work around just trying to fix your situation. I just think you need to like, if you're in a situation, especially that you need to, and you're put into a corner, like you'll see your creativity comes out actually, and you'll find ways. Like you'll be like, you know what, I need to like rent a space in the backyard or something. I know someone did that. They had like a huge backyard and like a huge space, and they did like storage in the back, and a whole section was done for storage, and it helped them cash flow like crazy. And then the cars that would just go into the back, grab whatever they needed, you know, in the storage areas, and then go out of the house, right? So it's just like when you're in a situation, just use your creativity, talk, communicate with others. So many people have different situations that happen to them, and they can even help you, right? Because sometimes like that, like I've never thought of something, you know, I go to Caro and I'm like, hey, you know, like, have you ever dealt with this situation or that situation, or what's your opinion on this or that? And then she'll probably tell me something I've never even thought of, because, you know, she's, you know, we all have different minds, right? We all think differently. So even sharing with the communities is so important.
Absolutely. I couldn't agree more. I mean, and everything you're saying with regards to like even flipping, right? Like it's not like we go flip beautiful houses just for the heck of bringing the price up. Like the latest flip that we did, it was awful. Like it was awful the amount of stuff that we had to do. And unless you have an absurd amount of money sitting in the sidelines, an average buyer cannot go in and really fix up these houses to make them livable. So it's really at that point is almost no different than being a builder, right? Like you're actually building a house and making it usable and creating housing because it was not in livable condition. Like the bank would not finance something like this because of the condition that it was in. So when you like, I mean, nobody thinks that builders are greedy. Why is it that, you know, if somebody's creating these housing opportunities and actually providing housing, like livable housing in the market, why is that penalized? I don't understand, right?
And like that, it's like they're blaming the wrong people, right? It's like, oh, they're blaming the landlords, but we're reacting to the changes within the governments or like the bank. Like, I mean, it all comes down from the government, wherever way you look at it, the government to the bank to us or government to us, whatever it is. But it's everything flows, you know, like if we're getting hit, they're like tenants will get hit, right? It's just that's how it is. And for some reason, yeah, it's like we get looked at it in the bad way, but it's just kind of like, you know, it's not us, you know, like that, like government does things to help the tenants, but don't realize, I don't think they don't realize the impact, right? They think they're helping the tenants and it usually ends up not helping, to be honest.
It hurts them more than it helps them, right? So
Yeah.
yeah,
But
we'll see
we're
how
at
we
the hour. It was really fun to chat with you and
You
hear
too.
your updates. It was fun to catch up and hear what you had to say or to share, because I mean we had already talked about it, but it was fun
Yeah.
to share it with everyone. So if you guys like what you've heard or have any questions, put them down in the comments. We'd love to hear what you think of this year, how it's been, what you think. We'd love to hear your predictions for the next year or the next coming months. And yeah, share whatever you feel like sharing. Tell us whatever problems, if there's anything coming up, we'd love to hear what you have to say. So thank you so much, Carol, for coming on and being a guest, and hopefully we'll see you at another one.
Absolutely. Have a good one, guys. Take care.
Bye.
Bye.